Guys, now this is how you're gonna trade your H1 CRT model, right? So first of all, you're gonna look for your directional bias and your market structure, right? So in this H4 time frame, remember we are starting our higher time frame analysis from our weekly every week, and then every month we are starting from our monthly time frame, right? So for this example, since we all know that okay, gold is on a what? It's on a strong bullish momentum, right? We are not interested in looking for selling opportunities. We only take what? Buying opportunities. Each and every bearish candle, it's an opportunity for us to look to capitalize from the markets, right? So now, as we are in H4, what we can do now, what we see here, we see that okay, when we are looking at market structure, this thing, it's sweeping what? It's sweeping lows, right? As it's sweeping lows, it's respecting what? Highs. It's sweeping lows, it's breaking highs. Ne? So this candle here becomes our order block, right? Why this candle is our order block? This candle filled liquidity from this imbalance here. So remember, an order block, it's a candle that sweep liquidity or fill liquidity or generates liquidity, right? So this candle, it it qualifies as being our order block, our valid order block, right? So now as soon as we get it close above this candle becomes our order block. So it's gonna support price to higher prices, right? So now we got it close above, and then we got another strong bullish candle, and then we opened a new candle. It opened lower, it opened and then it came lower, né? Right? As it comes lower, since we want to trade a continuation move inside our strong bullish momentum, right, we're gonna drop down to what? To our H1 time frame, right? So we are in our H1 time frame, right? So when we are in our H1 time frame, we check again what is the current trend, right? So our current trend also, it's what? It's a bullish momentum, right? So this black candle, this thick black candle, right, it qualifies as what? As our CRT candle. Why is it? It's a time-based candle. It's 1 a.m. candle, right? So 1 a.m. candle, we're gonna mark its high and its low, right? So CRT high, CRT low. And then after we did that, we're gonna take our vertical line, put it from 2 a.m. 2 and 3, where the 2 a.m. candle is gonna open and where it's gonna close, right? Which is gonna be the next what? The next candle, which is gonna be at 3 a.m. And then we check the time of our page. What do I mean by that? We look at the candle that broke the low or broke the high of our CRT. In this example, we broke the low. Since our narrative is to take buying opportunities, we see that this candle broke at 2 a.m. which 2 a.m. it's our key time. It's inside what? Inside our London opening kill zone, right? So this is our valid page. And then now we're gonna locate our key level. So key level is gonna be this FEG here, between this candle, candle 1, candle 2, candle 3, this middle candle. This is gonna be what? Our key level. This is our CRT low, CRT high. First target is what? It's 50% of this range, right? So now, as we see, as we got this, we're gonna drop down to what? To M5 time frame, which is gonna be what? It's gonna be our entry time frame. So let's go down to M5. So now we are at M5 time frame, right? Just quickly fix these charts first. So on M5 we need to check, let's say price is still here, right? Just broke our low. We need to check what time did the low got broken, right? Remember, we already checked at what, at H1. We saw that okay, the candle that broke our low is what, is a 2 a.m. candle, which is qualifying as our valid page, right? And then we're gonna put our gain box here. So this gain box is measuring accumulation, manipulation, distribution, continuations, or reversal. So it's AMDX or XAMD, right? So now, as we see that okay, now we're coming from what? From impulse move, and then we swept our low, tested our key level, higher time frame key level. Then now we don't enter before the start of this red box. So always we mark the opening price of this first candle on the red box, which is gonna be this bullish candle, right? It's gonna be what, our candle true open. This is gonna be what, our H1 true open, this bullish candle. This is the most sensitive candle inside this range, since it formed at what, in this red box. This red box is acting as what, as our manipulation. It's where our true order blocks are forming. So now this price, we see that okay, this price is supporting, this candle is supporting price going higher. So now we need to mark our model 1. So our model 1, it must be a black candle, right? Since we are looking to buy, we buy from a black candle, which is gonna be what, our bearish candle. So it's gonna be a big bulky candle with small wicks for it to be a higher probability candle, right? So for this instant is this candle here. This is our model 1 candle, right? So as we see, okay, our model 1 candle also overlaps with what, with our FEG here. So since it overlaps with our FEG, it's giving us what, a strong confluence to enter from this level, right? So now our first target is gonna be what, 50% level, somewhere here. It's gonna be our 50% first take profit, right? So when we did this, now we're gonna put in this indicator, which is what, our power of 3 indicator, right? So the power of 3 indicator, this, since we are looking to buy from this example, we're gonna expect the candle to open, come lower, and then test a certain key level here, and then high, and then close. When we are checking this candle, it's doing exactly the same thing that we want to see, right? So we are using what, since we are trading H1 CRT model, we're gonna check from what, from H1 candle. We're gonna, this candle, it's representing what, our H1 candle, right? So we can see it here, it's written H1, and then we're checking H1 is confirming. We can also change it, make sure that this indicator is ticked where it say New York time, use New York time. We can also check H4, and we're gonna see on H4 also we're expecting what, same thing, for us to have a highest probability trade when we're trading this model, right? Let's wait for the indicator to load, right? So now H4 also it opened here. This I don't count this. Why? Because it didn't test any significant higher time frame key level. So as long as they don't test any significant higher time frame key level and the move is not that big, it's still under construction, contracting phase, we can still confirm this as open. It's open, low, we're expecting high and close, right? Even the H4 candle, it's supporting our narrative. Then now, after this, what do we do next, right? So after we've confirmed that, we put in the new week opening gap indicator, which is this one. We want to see if we have our zones, our visible zones here, whether we have them below our entry to support as key levels, or we have them on the top where we are targeting as a liquidity to target, right? So in this instant, we don't have them here, as we can see. So when it's like this, we don't have them, it's fine, we carry on with our analysis. And then after this, we're checking what? We're checking if. So now, when it's like this, after we've identified our open, high, low, close, and we have identified our model 1 and key level and where we are targeting for our first TP. So now what we do, we're gonna put in the new week opening gap indicator. So we did that already. We saw that, okay, we don't have those levels here, right? So now the next thing after we did that, what we do, we're gonna put in what? Put in the quarterly theory indicator to see whether we have SMT or SSMT, right? So in this example, we're gonna use what we put, since we are trading gold on this example, we're gonna use silver, right, to check if here between silver from this level to this level and gold, do we have SMT or SSMT or PSP, right? So here on silver, we broke the lows of this candle, right? On gold, we didn't break it. So this is our SMT, right? This, we have an SMT here. And then when we check here, then we're gonna check, after we checked our SMT, we're gonna check if this lower low here from gold, comparing from gold and silver, does this candle look the same with color or not? For example, what I mean, on silver, you're gonna check if this candle it's a bullish candle or also a bearish candle. If this candle it's a bullish candle on silver, and as we see on gold it's a bearish candle, that means this candle it's our PSP candle. PSP stands for precision swing point, right? So it's another confluence that we are using when we are using quarterly theory, right? This candle. So on silver it's a bullish candle, and then on gold it's a bearish candle. So it's another confluence, right? Inside where we're staking our confluences, where we're looking to take our entries when we are trading the H1 model. So doesn't matter what time frame you are trading, right? Even if you are trading an H4 model, you're still gonna look for all of these things, just you're gonna use different time frames, right? So now what you're gonna do next after this, you gonna check if your currency strength meter allows your setup, for example. So we know that gold is a combination of gold and USD, right? So we're gonna check the currency strength meter and see if USD it's weaker for us to buy to confirm this narrative that we already have. So after we done that, we know that okay, now let's assuming the DXY it's supporting our narrative. Now we are safe to take our entries at our model 1 or at this FEG here. We target first TP here, our last TP here, and then we place our stop loss as 1 to 2, risky to reward somewhere here. This is our stop loss. Then we let our trade to run. This is how you're gonna do your analysis when you want to trade your H1 model. Doesn't matter you used the 12 a.m. candle to trade your model or 1 a.m. 12 a.m. or 1 a.m. it's the same thing, it's just different times. So this is how you're gonna take your H1 model.